Hello students, good morning. So today in this class we will be completing the business services part. Okay. So this is what we have discussed in our previous classes relating to banking services. See, banking services is one of the part of your business services. Today I will be completing the entire banking services part, and then I will be from the next class onwards I will be starting the insurance part. Okay, insurance part and postal and communication services part. In one class only I will be able to finish that. Now let us study in details about this banking part of this business services. Okay, just a recap of what we have studied in the last class here. This entire banking services will be governed by your Indian Banking Regulation Act of 1949. Okay, so as per their definition, any institution that accepts deposit from the people for the purpose of lending and investment. This lending and investment is considered as the income of the bank. Okay, and in savings account they will be giving us how much? 2.25% to 2.50%. But when they will be investing somewhere the money, they will be taking a higher rate of interest. That is actually the income of the bank. Then we have learned about the savings deposits. Then we have learned about current deposits. Recurring deposits already we have learned. See, in the cases with the MOD account, this MOD monthly option deposit account, it will carry the benefits of both the savings account and also the fixed account, also the current account. Okay, and in this MOD account, usually normal persons can also open this MOD account. Okay, so there extra in your passbook, extra amount will be written there, MOD balance. Okay, so this MOD balance will be carrying a higher rate of interest than that of your savings account. Even though you don't have your current account, then you can access the benefits of your MOD account. Okay, so today we will be discussing the other important services that the bank used to provide us. See here, number one is your bank draft. What is this bank draft? Here you see, it is a financial instrument. Any activities, any piece of paper that bank used to draw, that are always called as your financial instruments. Okay, it is a financial instrument that is drawn by one bank against the funds that is received from its client. Client, that means its customers. Whenever a bank will be receiving money from the customer with an order to draw a bank draft, then it will be drawing in its own instrument. That is called your financial instrument. And to whom it will be drawing? To another bank it will be drawing, and it will be instructing that bank to pay the amount of money that is mentioned in that financial instrument. Okay, so that is only the meaning of bank draft. And another thing is that banker check. Nowadays people use very less people uses this banker check. In early days this was of great demands when bank draft was not introduced. So this banker check has got the same characteristics as that of your bank draft. But in the banker's check, only it is confined only to a particular location. Okay, that is why this is also called local bank drafts. Okay, I suppose this you can understand. Now, in the next slide, here you see, this is also a various services that the bank will be providing. Number one, here you see overdrafts. Overdrafts actually it is meant for the current account holders. Okay, so under overdraft facilities we will be able to draw more amount than the amount of credit balance that we have in our account. Okay, so here this in overdrafts there we need to pay an extended amount of rate of interest. Okay, this rate of interest will be more than the amount of loan that we take from the bank. Okay, so this facility is not available for the current account holders. This facility is not available for the savings bank account holders. This is only for current bank account holders. Okay, next you see cash trading. Here you see, under certain securities, or we can call as collateral properties, or we can also call it as mortgages. So whenever you give some certain securities or mortgages, then the bank will be giving you some amount of credit facilities for a particular amount of time. Okay, and that one will also be depend upon the customer's credit worthiness. That means how much trustworthy he is in respect to his loan amounts. Okay, next you see the short term and the medium term loans. See, this is also a lump sum entire amount. Usually what the type of loans that we take from the bank, that is also included under your short, medium and long term loans. So under this arrangement, what happens, the bank will be giving us a loan for a particular period of time, and then we need to repay. That means the clients need to repay that amount after a particular after a particular time, either in lump sum or either through installment. Okay, here the rate of interest will be obviously be more than the rate of interest that the bank is giving us in our savings accounts. Okay, next you see another slide, EBanking. See, this is most commonly used nowadays in classes, also e-classes. Okay, so e-banking is what? It is any online mode of performing banks which is convenient. Convenient, that means it is very easy. Even those Android mobile holders, everybody can use it. Transparent, that means how much money gets deposited in your account, how much money is charged by a bank as their bank charges, or how much interest they charge, how much SMS charges they charge, everything is there written there. So that is why this transparent. Discipline, that means what? In every time, every second will be mentioned. Whenever you do a particular transaction, their time, date, everything is mentioned there. Okay. Next you say competitive. Nowadays every banks are competitive in nature. Every bank mobile app you see, either you download the SBI, either you download the the apps of any other private banks. They always used to compete with each other in order to satisfy the customer that the other banks are satisfying them. Okay, that is why it is the meaning of competitive. Okay. Next you see the various different modes of banking or the modes of e-banking. Number one is your debit card. Everybody here, you have your savings come there, debit card. Under this debit card, what happens? You will be able to draw money, or you will be able to transfer money from one person to another person, right? And how this transferring is possible? Through your point of sale, this POS terminal. Even the ATM machines that you see, that is also your POS terminal. Or even the swiping machines that you see in the various shops or any other places, that is also your point of sale terminal. So this point of sale terminal is connected with the bank server, and it will be transferring the account from your account to the vendor's account. Okay, that means the amount of money that you need to transfer to the other bank, that person or institution will be called as your vendor's account. Okay. Next you see credit cards. So credit cards is opposite to that of your debit card. In debit card you need to have your credit balance in your account, but in credit card there is no need to have your credit balance in your account. Okay, so the bank will be giving you this credit facilities for a particular time of money and with an extended rate of interest also. Okay, so that was about the debit card and credit card. Another type here you see, this is the most important part, that is the National Electronic Fund Transfer, NEFT, and other we will be discussing is that real-time gross settlement, RTGS. So in the bank this is now commonly used to transfer the money. So when the money either you can transfer through various apps, or if for those persons who do not use the various banks app, this form National Electronic Fund Transfer has been used. Okay, so under this what happens here, you say funds get transferred from one bank to another, but it is subjected to waiting time period. Another one we will be getting is real-time gross settlement. There is no waiting time. This waiting time period is one of the most disadvantages of NEFT. Here you see, here funds get transmitted from one person to another person or institution after a particular time. For example, if you do NEFT in a particular bank, then you will be knowing the procedure how to do it. So if now at this time I am doing NEFT and I want to transfer some amount to you, then it is not that you will be getting the money directly. Either you will be getting at 12 o'clock, or either you will be getting at 3 p.m. etc. like that. Or the bank may be doing something like that. When they will be getting enough sufficient money, then they will be transferring that order to RBI, and RBI will be transferring that money to wherever they want to go. So that is actually some of the disadvantage of NEFT. Okay. The disadvantage is that it is subjected to much waiting time or waiting limit of the amount. Okay. So these NEFT active facilities are available across 75,000 branches in India, and it is also increasing day by day. Okay. So next we will be seeing another slide, that is your RTGS, real-time gross settlement. So this is much more advantageous than the NEFT, but here you have to pay a higher rate of bank charges than the amount that you will be paying in NEFT. Okay. So here you see, unlike NEFT, funds get transmitted on the time that is clicked by the banker to transmit the money from one person to another. Whenever the banker will be clicking on the submit button, immediately the amount will be getting transferred. Okay. Unlike NEFT, there is waiting time period, but here there is no concept of waiting time period. Immediately funds get transferred. Okay. Next you say minimum value of RTGS should be rupees 2 lakhs. That means up to the amount of rupees 2 lakhs you will be you need to use NEFT. After 2 lakhs you need to use RTGS. This RTGS is also most secured. Okay. Next you see, bank may charge different amounts of bank charges. related to NEFT and RTGS, but in RTGS the upper limit, that means the amount of maximum amount of bank charge what the bank will be taking for every RTGS, that upper limit is usually fixed by the bank. Okay, usually both in NEFT and RTGS you need to pay bank charges, but in RTGS that bank charges is quite more. Okay, and it's not that the bank will be charging any high amount of money. Whatever the upper limit is there, the upper limit will be fixed by the RBI. Okay, so these are the various types of bank services that we need to understand in the cases with banking services. Okay, so this is the first part of the business services. From the next part onwards, we will be learning about the insurance part. Okay, so that's all for today's class. Thank you very much.